Yes, 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 we are back. We are back. I am back from the dead. Life threatening illnesses will always give you a different perspective on life. And with the voice back, the energy back, I am back here again, finally, to be able to do a weekend preview for the week ahead. This is OPEX week, which everybody already knew because we've had the schedule for August out since the beginning of the month. We already got through AMD's earnings, which were pretty much nothing. You had your new moon there on the 13th. Imagine that, how everything just went ta-da. And what's happening right now as we speak, what we're living through the moment, at the moment here, is the Fibonacci spiral happening here on the 16th. So did it happen already on the 13th? Is it coming here on Monday? We don't know. However, we did know that we were going to be going up all the way into that. And that worked out quite well. Now, what you have are your warnings, which I've been giving you throughout the course of last week, were your warning signs, your warnings that, hey, warning number 1, warning number 2, and, well, you got warning number 3 there on Friday. Friday, you were able to produce the lowest volume on SPY since February 19th of 2025. Some of you might remember February 19th, 2025 because you were here in the room, and how we were aggressively short for a multiple number of reasons. And then all of a sudden tariffs kicked in and you had your minus 20% drop. Your last minus 20% drop in, let's see, 340 trading sessions. 340 trading sessions, we've had a bottom, a minus 10%, minus 20% correction. Now, you've had warnings, and Friday was another warning. And we got our green week, which is exactly what we wanted. And here's yet another one for you. You go out, do your own research, look at it on your own. The last 3 midterms each began a decline of 10% or more. September 19th, 2014, September 20, 2018. We were here, we were running this. A lot of you remember that. And August 16th, 2022, which was the big bounce off the June lows. And then we sold off into October. Now, the reason why they say the last 3 midterms began a decline of 10% or more is because they can't say the last 4. And how they say every one of them started within a day of OPEX or VIX expiration. And again, the reason why they can't say 4 is because, I'll pull up for you here, where you're at, there you are, no, you are here, over on this chart. No, you're not. You are over here. Back in 2010, your decline started on August the 9th. This was not OPEX. And your drop finished on August 25, and it was only minus 7.92%. That's all that it was. So that's the reason you cannot include the last 4. Apologize for any of these technical issues of getting back onto the right screens, but there you are. So again, you had your warnings all last week. All last week we had warnings coming through. Boom, boom, boom. Over on the QQQ, again, same thing. 2 green weeks in a row. Very nice. Needed to clean that up. However, like I pointed out, there is a gap up above. There is a gap up above. You've got one gap, 736.40. One gap, 737.95. We've only been able to make it to 734.39. So, possibility, we're still getting that little tiny higher high here on Monday. And then we can start saying with a little bit more confidence that the official top is in. IWM doesn't have a top. It just continues to put 2 pennies and 3 pennies and 7 pennies on top of any top that it has. And it's been in the 300s the entire week of last week, which is no problem. But it did have that 7-week period of nothing but consolidation. So seeing it go fractionally higher above 303, I'm not surprised in any way, shape, or form. And it's not been able to go that much higher anyway. So still looking at that with that plus 20% above year to date, being over there at 297, very, very, very optimistic that we're going to be able to see 297 within the very short term. So back on your SPX, again, this has been a hell of a bounce. So our first decline is at 76.98.15 from back on August 6th. Coincidentally, happens to be where your 23.6 retracement is back to the dip that we just bounced off of coming over here on July 29th. Right there. So that's the main number that you're looking at for a big, big bottom warning. Big bottom warning calling you at 76.98 for anybody out there looking to be nothing but buying the dip. You want to put the energy in to get a move to the upside. That's the only view you want to have. I hope it works out for you. I don't think I really need to go over too much because I've pretty much covered it all. So let me go on and get onto the charts. And SPX, here you are, off of 73.13.92. 1, a 2, a 3, a 4, and a 5. 5 unfilled gaps to the upside. Again, remember, we have a bullish, we have a bearish. We have both bullish and bearish views. And as of now, all that we're looking at this as being as a glorified high placement. And until we start seeing some movement to the downside, we cannot rule out that bullish view that we are going to get that one higher pop up into that 88, 81, 81, 79, 80 area. We cannot rule that out as of yet. And I'll tell you at the end of the video how that's going to happen. So off of the SPX, let's go on to the bigger and broader view, which is the cheapest VIX which you have had the entire year. Another big, huge warning sign. Now, coming on to the actual VIX chart, there is a gap. There is a gap down below that we have not touched. We have not filled. We have not filled that gap. There is a gap down below. There's actually 2 gaps down below. There's one going back to December 28th, 2025. And then there's one more going back to December 6th of 2024. So you've got a couple gaps to the downside. I haven't heard anybody talking about VIX getting reverse split. Haven't heard any of that. But you are having your warning signs down here. And when you have a VIX down here at 14, you can forget about any kind of safe SPX credit spread. We did well last week, but you are not going to get any kind of credit with a 14 VIX. It's just the way the game goes. If you want to go ahead and play the SPX spreads, I hope you really do have success with it. But having done this for 20 years, 22 years, as far as trading online, giving advice to people, I don't see any reason that you'd want to be getting into anything other than something that is going to pay you. Like I shared with you last week, and what we're looking for with these $3.50, $4 credit trades. On to the SOX. Well, the SOC did what it was supposed to do. You got your bounce back up there right around 565, 563. That's a perfect little B wave. You got your A wave to the downside, your B wave to the upside, and theoretically, we are going to be looking for that C wave to come back and fill the ceasefire gap, bringing us down here right around to 360, which, if that happens, well, You can forget about having that 14 VIX, and you can forget about SPX being in the 7600s. So it ain't going to be happening this month. Forget about that. On your IWM, again, you had this very painful ABC, which barely got down -5% down here into the July lows. And here you've had a glorified rally to the upside. Back up here, just above that old 302.72. 3 points higher, 1% higher, and a couple of gaps to be filled with 297.91, the number that you are really focused on. Over on DIA, looked at this in a couple of different ways, and yeah, it actually fits. Your 1-2 coming off of the big lows over here back in March, your 1-2, your 3, your 4, and coming up over here almost perfectly to the 200 extension, 545.39. So that fits perfectly. However, when you want to look at this from a big, broad, wide view, you're at the 138.2 extension off of COVID. You come off COVID, you go in there to your January 2022 highs, down in there to your September 2022 lows. You're at your 138.2 extension. That is a big, massive warning that you are hitting a big, huge wave top. Now, we already had that prior to going into this gap up that we had in the beginning of the month with this big 150 right here. And this 150 extension that you're talking about is coming off the 2009 lows, going up there into the 2020 highs, down into the COVID bottom. So 2009, COVID top, COVID bottom, and a big 150 there. So you've got some big warnings. And as you see over here, coming back into February, that thing nailed it like a glove. You thought, okay, perfect, because we're right here at the 138.2. Perfect. But we got our big bounce over here because, the economy is doing incredible, according to the stock market. Horrible comment that was made there on Friday. So over here on SPY, again, looking at this from the dates that we have, from all of the data that we have, from where we're at, the fake print, we're right up here at the 161.8 extension coming off of the COVID bottom. COVID bottom, 2022 top over in January, the 2022 bottom, we're at the 161.8. Come on down here to the 200, you're at the 2009 bottom, your pre-COVID top, down into your COVID bottom. That's your 200 extension. And these are the ones that we gapped and rallied over on August 4th. That made me look like I didn't know what I was doing. Right up there. However, like I keep pointing out to you, this wants to go to that 78.57. Wants to go to 78.57 over there on the SPX. So that's 799.50 on the SPY. It's open. There's no question it's open until we start getting a breakdown back below 760, back down below 744. Then we know for sure we're starting to head down into that minus 700 area. On crude, which nobody's really interested in other than a couple of you, I am. ABC, 1, 2, 3, 4, 5. ABC, and here we are recovering for 83.60. We recover 83.60. It is a big risk to the markets because you get crude back up above 83.60. You get crude pushing to 87.05, 87.26. And there's a big fuck up going to be happening for anybody that's bullish in the market. And here we are in the NQ, which it was a cool phone call I got to have on Saturday with Bill. I'll send you a picture of the motorcycle, Bill, when I get it here delivered. It was an excellent bounce to the upside. Excellent. I was happy and very proud to be able to guide you not only to that beautiful 29.95 kiss and kickback that we had back down to 27.82 over there, middle of the week. But the run-up that we had here coming up into the 3100, 30/20/24, it's a beautiful Elliott Wave dinosaur, 1, 2, 3, 4, 5. It is absolutely perfect. But we got to see a breakdown. And until we see a breakdown, we can't say that we aren't going to be able to get to that 3600 area, with that 3600 area being able to fill those gaps on the QQQ. So you got a beautiful short area here with a couple hundred points that you'd have to have a stop loss on if you want to play stop loss game. Couple hundred points maximum. You got a beautiful short staring you here in the face. Me, 29,105. So again, on the QQQ, when you look at this from a broader review, you've got your 1, 2, 3, 4, 5 completed when we went to the all-time highs there on June 3, an ABC for the A wave to the downside, a fucked up view for this B wave up here. Raw, just those two little gaps are unfilled. And then if everything hits perfectly, your C wave takes you down there below that fucking ceasefire gap. Right down there below 610. Wham, bam, thank you, ma'am, boom, the elections are happening. So, again, you got a VIX, you got an opportunity. You got a VIX, you got an opportunity. So I'll leave you off there with where I messed up earlier, going over here onto this SPX chart, which again, this being the fourth midterm ago, back in 2010, it did not have a greater than minus 10% decline because two reasons. It didn't start on OPEX, and it didn't go minus 10%. It only went minus 7.92%. So where we are on the NQ, again, looking at this from my detail, that 30/20/24 is absolutely gorgeous. 3100 ain't so shabby, but that 30/20/24, and you're going to go ahead and put on a pair of fucking shorts, that is one of the most glorious things that you will be able to find anywhere on the planet at this point in time here in the middle of August. Going the wrong way, but finishing off you in the right place. So I've had to make an adjustment. I've had to move my SPX downside target to 61.2932. Like I've shared with all these big tops. Big top over here, February 2025, 61.4743. Where'd you come down to? 48.35. Where's the 23.6? 48.54. It just, you can go out as many weeks as you want to go out, as many months as you want to go out. The shit is mathematically calculated. You can't fuck it up. It's impossible to fuck it up. And here we are talking about this since we're zoomed in. Here is your August highs, August 15th, and there's your greater than minus 10% correction going into October of 2022. The midterms. Let's zoom out again while we're here and waste a little bit of time because we're paying for the electricity anyway and the internet is already done. This is your plunge protection team, and let me go out there like this. There's your plunge protection team coming in here to Christmas morning, December 24th and December 26th, where we bottomed out there at 23.46.58. 23.46.54 or 50.61, something like that. It's a double bottom within a couple of pennies. We had already broken the 24.04 target that we had to the downside, and that was when Steve Mnuchin came out with the plunge protection team. Some of you might remember. And we went 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row straight to the upside. And Doug over in Alabama still trolls me today, because I was talking about the Christmas rally coming here on 2018, and he had $125 in some SPY calls that didn't work out because he wanted to play the weekly. He didn't want to see the big, broad, wide view. Well, Doug, I hope you're still enjoying your fucking cleaning job over there in Huntsville, Alabama. And again, your bigger, broader, wider view is never going to let you down. It's never going to let you down. It will not let you down. It won't. It just simply, it won't. And there is that big, broad, wide view coming off of that 2009 bottom of where we're at. These are even bigger because these are coming off of the Great Depression lows, 73.2791, 72.8209, 76.4494. These are big, huge Fibonaccis that we are floating above. And everybody wants to play the AI game, so fuck it.